Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings, but fair warning, this one might just involve a little more than meets the eye. Today we are diving into a filing from News Corporation, the media giant behind your favorite newspapers and television channels. They have just released some routine information, but as always we are going to dig in and see what it really means for investors and what the company is up to behind the scenes. So let's get straight into it. If you are looking for straight talk and simple explanations on complex financial documents, make sure you are subscribed. And don't forget to join our growing Discord community linked in the description below for more exclusive content and discussions. So News Corporation is talking about its stock repurchase programs. Essentially, the company has the authority to buy back up to $1 billion worth of its own stock. This sounds pretty standard, but what is interesting is that under Australian Stock Exchange rules, they have to report these buybacks daily. This filing is essentially a notification that they are keeping up with those reporting requirements. Now, this might seem a bit dry, but think about what a stock buyback really means. When a company buys back its own shares, it reduces the total number of shares available in the market. This can have a few effects. For one, it can increase the earnings per share because the same profit is now spread across fewer shares, making each share look more valuable. It can also signal to the market that the company believes its stock is undervalued and that management has confidence in the company's future prospects. News Corporation is doing this for both its Class A and Class B common stock. Class A shares typically have voting rights while Class B shares often have limited or no voting rights but may carry other benefits. By repurchasing both types of stock, they are managing their capital structure and potentially rewarding shareholders. The filing also includes what are known as forward-looking statements. These are essentially educated guesses about the future. They are saying, hey, we plan to repurchase stock, but the actual outcome depends on things like stock prices, market conditions, and even new investment opportunities. It is important to remember that these are not guarantees. They are saying, in essence, if conditions are right, we will buy back shares, but if things change, we might not. This is standard practice to protect themselves from lawsuits if their future projections do not pan out. The key takeaway here is that News Corporation is actively managing its share count as authorized. While the filing itself is a procedural update, it points to an ongoing capital allocation strategy. The fact that they are required to report this daily to the Australian Exchange highlights the global nature of their operations and the varied regulatory landscapes they navigate. These daily disclosures, even though they are just confirming the buyback activity, are a testament to the transparency News Corporation is committed to with its shareholders and regulators. It is not just about making a big announcement, it is about consistent reporting. Now let us look at what this means from a more strategic standpoint. Companies like News Corporation are constantly evaluating how to best return value to shareholders. Share repurchases are just one tool in their arsenal. Other options include paying dividends, investing in new growth opportunities, or making acquisitions. By choosing to repurchase stock, they are signaling that they see more value in buying their own shares than in other potential uses of that capital right now. It is a form of putting your money where your mouth is. Looking at this filing from a Warren Buffett style perspective, we are not seeing huge financial numbers here because this is more of a disclosure about an ongoing program rather than a detailed financial report like a 10K or 10Q. However, the fact that they have $1 billion authorization for buybacks indicates a healthy cash flow and a management team that is confident enough in the company's stability to invest in its own stock. One strength we can infer is financial discipline. Having a repurchase program in place for both classes of stock suggests a thoughtful approach to capital management. They are not just spending money, they are strategically reducing their outstanding shares. A potential risk, however, could be if the company starts buying back shares at inflated prices. If the stock market as a whole or News Corporation stock specifically experiences a downturn, then those repurchases could end up being less effective or even detrimental. Management's judgment in timing these buybacks is therefore crucial. What is notable here is the detailed reporting requirement by the Australian Securities Exchange. This level of transparency for what might be considered routine buyback activity in other markets shows a commitment to regulatory compliance and provides investors with near real-time information. In conclusion, News Corporation is continuing its share repurchase program, demonstrating a strategy of returning capital to shareholders and potentially boosting earnings per share. While this specific filing is more about process and disclosure than raw financial performance, it underscores a key element of their capital management strategy. The company appears to be in a solid position to execute these buybacks, giving investors a reason for optimism about their ongoing business health and shareholder value. Alright, that is our quick decoder on this News Corporation filing. What is your take on company stock buybacks and what they signal about a company's future? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more. And don't forget to join our Discord community linked in the description. Thanks for watching, and we will see you in the next one.